Good day, Mr. Hayden. Welcome to our presentation on the bank loan you're required to include in the business plan for Khoza Bazaar. Our briefing mentioned that the Khoza Bazaar group has had their eye on the factory adjacent to their head office building in Glen Vista for a few years. It appears the factory will be available for purchase during the year, and KB would like to negotiate an offer with the selling company as soon as possible. It's Khoza Bazaar's intention to start manufacturing their own line of canned foods in the factory. And we will explain the accounting process and the considerations of the bank loan to you. So a bank loan represents the borrowing of an amount at agreed terms, as contained in the written agreement between a bank and the entity. Bank loans are often utilized to supplement the cash funds of an entity. The loan agreement stipulates that interest must be charged at a specific rate. Consequently, the loan amount that must be repaid increases as the interest accrues over the loan term. The obligation therefore comprises two components, namely the capital borrowed and the interest accrued. So a liability is defined in IAS 32 as a present obligation of the entity arising from past events, the settlement of which is expected to result in an outflow from the entity of resources embodying economic benefits. The definition can be applied to a bank loan in that Khoza Bazaar will have a present legal obligation towards F&B because of the signed loan agreement. This requires Khoza Bazaar to repay the principal amount and any accrued interest back to F&B. The past event is the acceptance of the loan agreement coupled with the receiving of the loan amount in Khoza Bazaar's bank account. And the settlement of the amount due to F&B is more likely than not expected to result in the outflow of cash in the future. Furthermore, an item that meets the definition of a liability is recognized only if it satisfies both of the following recognition criteria. It is probable, or more likely than not, that future economic benefits associated with the item will flow from the entity, and the item has a cost or value that can be measured reliably. So as previously mentioned, a bank loan satisfies the definition of a liability. Khoza Bazaar is legally obliged to repay the bank loan in accordance with the loan agreement. This makes the outflow of economic benefits from Khoza Bazaar, resulting from the repayment of the bank loan, more likely than not, and the value of the bank loan can be measured reliably at their historical cost price thereof, namely the amount received as stipulated in the loan agreement. Subsequent measurement occurs at the amortized cost of the bank loan, but it is important to remember and note that interest is recognized as an expense item and can only be measured as it accrues over the period of the loan agreement.
The Khoza Bazaar Group will be making an offer of 12.5 million rand to purchase a factory. It is expected that they will receive a mortgage loan of 80% of the purchase price. The principal loan amount will therefore be 10 million rand. In Journal 1, we recognize the bank loan by debiting the bank account and crediting the bank loan account with the principal amount of 10 million rand. In Journal 2, we recognize the purchase of the factory by debiting the buildings account and crediting the bank account with the purchase price of 12.5 million rand.
You'd want to know when the subsequent measurement happens. So this would happen normally at the end of each reporting period at the amortized cost. We will be using the 7% interest rate as agreed upon with F&B. So the amortized cost of a loan on a specific date represents the present value of your future installments, so how much you still need to pay F&B. You'll have your loan amount right in the beginning as your 10 million. Then for each year, you'll have 10 equal payments of 1,423,775. What makes up that 1,423,775 is your 7% of your amortized cost plus the value that you need to pay, which will be your capital amount. So how you will recognize this in your journals will be as follows. So we would debit your interest expense, and then we would credit your bank loan. So this is just to recognize the interest expense for the year. Then we would debit your bank loan to increase the cost, and then debit your bank account to decrease and ensure the payment.
Moving on to the presentation of the bank loan. Firstly, in the statement of profit or loss for the period, we recognize the interest expense as finance cost, which is 700,000 rands. In the end, we subtract it from revenue to get the profit before tax. And then moving on to the statement of financial position, since we had acquired a factory, we recognize it under property, plant and equipment at the historical cost price, which is 12,500,000 rands. And then under current assets for cash and cash equivalents, since Khoza Bazaar used the 20% of the 12,500,000 from their cash reserves, we recognize it under cash and cash equivalents. And then also for non-current liabilities, long-term borrowings are recognized as 8,501,786. And then lastly, the current portion of the long-term liabilities, which is 774,439.
Okay, moving on to the disclosures. The notes of the financial statement will reflect the finance costs, which represents the interest expense of the loan at 700,000 as at the end of December. We also detailed the buildings, which is the property in Glen Vista that was bought, valued at 12.5 million. We then move over to the long-term borrowings. Here we reflect the amortized value of the loan at the end of December being 9,276,225 Rand. Interest rate, which is equal to the current prime rate of 7% compounded annually, and the loan is repayable in 10 equal annual installments of 1,423,775. We then reflect the value of the capital repayments for the coming year, which is 774,439 Rand, which leaves us with the value of the loan, or the amortized value of the loan, of 8,501,786.
Right. We hope that this example provides some clarity on a bank loan as a finance option and what considerations to take when accounting for it in Khoza Bazaar's records. Please feel free to contact us if you have any further questions or comments. Thank you very much.